Michelle, welcome to the Lessons of a Lashpreneur show. Thank you so much for coming on.
Thank you so much for having me. I'm so excited.
I know Michelle and I have a similar business coach, and that's kind of how we got connected. And I was like, "Oh my gosh, you do this? You were a hairstylist turned accountant? That's such an unusual thing." All right, so let's get into accounting talk. The post specifically for me that really caught my attention, that especially now that it's the beginning of the year and the changes go into effect for 2022, is Venmo. So can you explain to me what Venmo is doing differently in 2022 versus 2021? Why people are freaking out about it and why they may not necessarily have to freak out about it, or what generally they're freaking out about?
Yeah. Okay. So let's chat 1099s. That's what's going on with Venmo. Venmo is like, hey, we're going to start issuing 1099s. Payment processors, that includes credit card companies as well as cash exchange like Venmo. When it's a business, they've always been required to issue 1099Ks. It's just that the thresholds were so much higher previously. It was $20,000 of transactions and 200 transactions within a 1-year period. If both of those items were met, then they would send you a 1099K. And that 1099K goes on your tax return as income. Well, the IRS changed some rules, and it's not just Venmo, it's every payment processor. When you're processing for business now, it's $600, period. No amount of number of transactions, just if it's more than $600, now you're going to get a 1099K. Here's the thing. If you've always claimed all of your income, you don't have a thing to worry about. You're good. It's just that now your accountant is going to put this piece of paper on, well, not piece of paper because we do everything electronically, but like we're going to, put it into the software. If you haven't claimed all of your income, you should be shaking in your boots right now because you're going to have to. But it's really, truly, if you've been running your business in a legal and compliant way, it's no different. Specifically speaking, what happens is, as an accountant, when I go to do someone's tax return, I generally pull their reports from QuickBooks. So let's just say you had $50,000 of revenue and 20,000 of it happened to be from Venmo. Well, now when I do the tax return, I'm going to put in the 1099K that says $20,000 from Venmo. And instead, where QuickBooks, it says you had 50, I'm just going to put in 30 because I'm going to subtract out what Venmo said. So that's why, like, at the end of the day, it makes no difference because you're just going to claim it one way or another. It's just now it's actually getting reported to the IRS.
Yeah, and I think that's the big distinction, is that Venmo on their end is reporting that your business did this dollar amount in transactions. So the IRS is aware that you process those payments. Now, if you've been hiding it or you didn't claim it or you didn't, put it into some sort of tax return, there's going to be a discrepancy between what Venmo is reporting and what you're reporting, which then can open up a can of worms with the IRS, because the IRS is going to be like, well, we have record of this money. Where did it go? It's not on your tax return, kind of thing. Is that what I'm understanding?
Absolutely.
Okay. So that would be the difference. A 1099 is basically the company that's sending you the 1099 is reporting that this income was paid to you, or you paid them that income. And then it becomes an official document. Whereas before it was, they were only sending out 1099s for transactions over 200 in a year or $20,000 or more in total. So you could kind of get away with, if you did 10,000 in Venmo, but you did it as like pay to friends. Some people might have been hiding that and not claimed it. And now that's going to be a documented transaction from Venmo, correct?
Correct. And I should be clear that payments between friends and family is still not subject to these 1099 rules. So it's just business transactions.
With the disclosure that if you are providing a business service, because I fully know that this is what people do in our industry, unfortunately, is they will have clients pay them as a friend so that it won't be tracked. So just to be clear, that is not what she's saying. Is like, yes, it won't get the 1099, but that's also, what do you call that? Essentially illegal, because you're not claiming that income and you're avoiding the processing fees.
Right. You're breaking the terms of service with Venmo if you're using it outside of, it has to be legit friends and family. And even if it is your friend or your family that you're providing the service for, it's a service that you're providing and they're paying you because of that service. So it is important to use the business account in those situations.
And a lot of times people don't do that because they want to avoid paying the processing fees, right? They're like, oh, I don't want to pay the 2.6% and then plus 16 cents per transaction. But in so many ways, whether you're not reporting tips, whether you're not claiming the money, you're playing such a small game when you do it that way. And really, the person that it affects the most is you, because you are going to want to probably get a house someday or qualify for a nice apartment that you want to rent, and or get a car, or get a loan, a business loan. And you have to have proof of income. You can't just say, oh, well, I made $10,000 more than that, I just didn't claim it, but I have that cash. No bank is going to be like, okay, we believe you. They need the paper trail. So you're playing such a small game if you're trying to hide money from the government so that you can keep 2% more of your money. That's such a small game to play. So I'm fully aware, and I get messages all the time. I'm being told by my educator that I don't have to claim this or just transfer it, sell it, whatever. Keep that extra money. It's such a small game and small mindset to be playing.
Yeah, I love what you're saying in terms of small, because in my mind, building a business is a lot of work. So if I'm going to do that, I'm going to do it in a way that's going to be the smarter way so that I can scale, so that all of this groundwork that I'm laying is going to build into something bigger. When you start doing things that are outside of the legal way of doing stuff, the systems don't work for you because they're not set up to work that way. So you end up adding on other like back-end systems or things that you have to do to make things work, and they're not scalable. So in addition to it not being compliant and not being legal and opening you up for an IRS audit and taxes and penalties and interest and all these other terrible things, it's just like you said, it's the small game. It's like, you're not really trying to like build like a strong business that's going to scale and work for you in a much larger way.
Give you that freedom that most of us get into business on our own to have. I totally agree. And I think in a lot of ways, my struggle is that there's so much limited education, especially for beauty professionals. Beauty school sucks at giving any sort of guidance when it comes to the legalities, the business side of things, especially handling your money. I mean, I remember I went to a beauty school where the reason why I chose it because they had business training or curriculum. And the first class I sat in was this massage teacher telling every student in there, and most of them were 18 and 19 years old, get a credit card to build up your credit. And I'm like, you just gave free permission without any boundaries to a bunch of 18-year-olds to go get credit cards. Terrible idea. And I challenged him on it, and he ended up quitting. So I didn't get any business training in beauty school, but it's so interesting how little advice there is. So if somebody was new starting a business, or they're just now wanting to get on top of accounting and the financial health of their business, what are some best practices for either accounting or bookkeeping that you can recommend for those that are new to it?
Yeah. Okay. Let's say you just like barely started. The first thing that I'm going to recommend is setting up some kind of like business entity, like an LLC. When you register that entity, it's really a legal matter. It doesn't impact your taxes at that point. It's just to give yourself some protection. But that LLC gets something called an EIN number. That you're going to take that EIN number and you're going to take it to the bank, and you're going to open up a business bank account. And I know it sounds so basic to separate, and people oftentimes don't really understand like why it's that important. The reason why it's important is because, one, if you care at all about your time, if you don't have unlimited amounts of time where you can go like recheck a bunch of stuff, then you're definitely going to want a separate bank account. But two, it's really hard a year later when you've been intermingling business and personal in the same bank account to figure out what was business and what was personal. Obviously, some things are obvious. Cosmoprof, Salon Centric, whatever the normal vendors are. Okay, that's probably, business, but you might go to Target to grab something and that might be business, but unless you've got the receipt later, and which you should be saving receipts, but like now you've got to do all this digging to figure it out. It's just a massive waste of time. And speaking in terms of scaling, you can't outsource that. Like I have people that come to me and they're like, I need help getting my bookkeeping caught up. And I was like, okay, here's the thing though, is you used a personal bank account. I'm not going to save you any time doing your books because I'm literally going to have to ask you about every single transaction. Was this business or was this personal? And to me, that's like the heartbreaking part is like, it's on you to do it. And that sucks.
Yeah. And I mean, even when I had a business bank account, but I remember that I had to sit down with 12 months because I wasn't doing QuickBooks in between. And I had to sit there and write out every category and then go to my account and be like, here's the categories. And it took me 3 days to do that. And I have no idea how long it took my account, but they charged me for every hour of it. But it's just such an inefficient process when all of us want more time. So building out the systems and processes to make it easier. So that way, like my accounting now, and granted, I have an accountant and a bookkeeper, but it takes me about 15 minutes twice a month to do all of my accounting, check in with it, check my profit and loss, and make informed financial decisions now, as opposed to days or hours or it being overwhelming. And so it does free up time when you get the systems in place. So what are your go-to, maybe explain the difference between an accountant and a bookkeeper, because those are two different things.
Yeah, for sure. So a bookkeeper is someone who does bookkeeping. And I know that sounds silly, but let me explain what bookkeeping is. So bookkeeping is the process of putting a category next to every transaction. And so what we want to do, the purpose of bookkeeping is to group all of the similar transactions into the same categories. Once we do that, we're able to produce something called a profit and loss statement. That is the gold. That's the whole purpose of why we're doing the bookkeeping. It's not that, organizing things or whatever is fun. It's that it's that when something is organized, now we have information to make business decisions. That's the whole point. So what the bookkeeper is doing is they're doing all the groundwork of categorizing all of your transactions. For the most part, a bookkeeper isn't going to be able to then take your profit and loss and say, hey, you're probably overspending on back bar. Hey, have you checked your retail inventory levels? It looks like you're buying a lot, but you're not really selling as much as you're buying. Look into, that's not necessarily what most bookkeepers do. So then you have an accountant, typically a CPA, but a lot of times they have a background in taxation, so they can help with that side. But also it's like a bookkeeper on steroids, if you will. It's like, we know all of the bookkeeping stuff, but it's really more about looking into the future, planning out goals, doing like forecasts. Like, for example, I was sitting down with a client this week and they're moving into a bigger space so that they could hire out an assistant, get things going. And so we projected out, okay, how long until you hire your assistant? Okay, now that you have an assistant, how much more revenue are you going to be able to make because of them? So we're looking out 6 months into the future to say, okay, we're going to make this business decision and these are the results that we can expect. So it's more strategy.
And the tax part of it, right? And the strategy and the tax savings and liability and all that kind of stuff too. And I feel like because I know a lot of people are worried about the cost of an accountant. And my experience has always been the accountant ends up saving me more money in write-offs and tax law that I would have, if I was DIYing it myself with TurboTax, I would have never known that stuff. So I'm not an expert in business tax law. And so an accountant should, in my thinking, save you way more money in write-offs and all the little loopholes that they know of, and tax liability than they cost you,
Yeah, absolutely. I would say one of the biggest tax saving strategies that we use is an S Corp election. And that is one of those things where it's like right now we're doing that for our clients because the deadline to make a timely election is March 15th. And so it's like, unless you have someone looking out for you, or it's like, hey, I noticed like you've had a lot of growth, in the last 6 months. And I think this year, as you continue that is going to be really big. We can save you, $5,000, $10,000 by making this election. It's stuff like that where, and maybe not every accountant is that way, but you want to find an accountant who's kind of looking into the future for you instead of like gathering a bunch of information that happened, last year.
Yeah, I agree. And that's exactly, an accountant would need to be filed or taxed as a S Corp, even though I'm an LLC. And it does make a very big difference in just how you pay yourself as an owner and which things have certain taxes and which don't. So kind of give me because the struggle I ran into for the first, I would say 3 years of my business is I had accountants that were awful. Awful. I felt dumb every time I went in there. They talked over my head. They used words I didn't understand. And I have a business degree and I'm a fairly intelligent woman and can Google a lot of stuff. But that I had accountants that made me feel dumb. I had accountants that I don't know, just didn't really give my business the time of day. So it wasn't like that strategy component. I finally feel like I have somebody that I can go to who's almost like a mentor to me, who teaches me about what they see and how they view my business. So kind of share with me some questions to ask accountants or ways to interview or find accountants that can help somebody who doesn't understand this stuff to start to learn it or feel like their accountant really is a huge asset to their business.
I think one of the most telling things that you could ask an accountant is how many hours a week they and their staff are working during tax season. And I don't think anyone would ever think to ask that, but being in the accounting industry, I know, having worked in other CPA firms, it's not unusual to work 80 hours a week during tax season. But the reality is that a lot of CPA firms are understaffed and they overwork their employees, and it yields really poor customer service results because literally all they care about is getting your tax return filed, because they have thousands of tax returns they're trying to get out the door by the deadline. And they're not going to look at, oh, Tara had a really great year this last year. We should make an S Corp election for her. They're just trying to get the return in front of them done and out the door. And they're not going to sit down and explain stuff to you. And they're just not going to take the time because they've overcommitted themselves. So I think that would be probably the most telling thing is, has your CPA overcommitted? And beyond that, I think it's good to get clarity on what is involved in the service. So are you hiring just for a tax return? Because that's different than having a CPA that is, you're going to call up every time, hey, I'm about to buy a car and I need to know, is this somehow going to be a business expense? And if so, how's that going to work out? You're going to have questions during the year. And so finding out if that's the kind of service that CPA offers, because you want someone who's going to be there when you need them. That makes sense?
And I love that. I didn't even think about like how busy they are because they've overcommitted, and that they're not looking strategy. They're just trying to check the box like submitted, because that's what you're essentially paying them to do. That's amazing. Thank you. That was a great question. Great response. Okay, so we've got some Q&As from some of our Instagram followers. One said, I don't know if I should stay a sole proprietor or go LLC. Now, I know that's going to be individual to her, but what are some of the recommendations you have, or just kind of things to consider when you're a sole proprietor looking to move into an LLC?
Yeah, I, for the most part, don't really see a reason to wait to form the LLC. There are some places in California who charges like an $800 minimum tax, even if you have a loss. So I do understand in places like that where it's a little more tricky. So this is generally speaking, I don't know where you live. I don't know the state's specific rules to where you are, but generally speaking, for the vast majority of Americans, there's no reason to wait. And it's, for the most part, really not that expensive to form an LLC, $100, $200. And then there's some kind of annual fee, though it's usually not as much as the initial registration. The reason why I say that is because there are risks when you are working on people. And so if anything goes sideways in your business, you need that protection, because if you don't, your house, your car, your personal bank account, all of those things become at risk if there's ever a problem in the business. So you're protecting your personal life and your family, everything, when you set up that LLC. But then from a tax planning standpoint, it really helps, because once you get to a point where you have at least a $50,000 profit in your business, you're going to want to look into making an S Corp election. And you have to have that LLC set up to do that. So you're going to have to do it at some point anyways. And it's just going to make your life so much easier to have the entity already formed. If you don't, it's fine. I've had plenty of people that got to the S Corp election point and we're still sole props, we figured it out. We formed the entity, but at the same time, new EIN number, new bank account, new sales tax ID number, fixing it with your credit card processor to go to your new tax ID number. Like, you don't really realize how connected everything is to your EIN until you have to reform everything. If you've got employees, new payroll tax ID numbers, like just everything is connected. And so that's why just so much easier to get it done from the beginning.
Yeah. In California, it's $800 every year. So it is a big chunk, because I was in California when I formed the LLC. Here in Tennessee, I think it's $300, which, again, it's the cost of doing business. And when you're thinking about the long term of your business, those costs of kind of playing the game of a business owner, when we're playing a big enough game, $800 shouldn't be a deal breaker when it provides so much protection for you. Because the alternative, the risk, which we try not to have a whole lot of risk in our business, is if somebody sues you, they take your house or your car or any money, life savings, anything like that. And it's not worth the risk to save $800 in a year. There's other ways to make up for the $800 cost that would be much easier than you trying to make sure that your house doesn't get taken should somebody trip and fall in the parking lot. Great. Okay. We have somebody who was new. They said, since I just started making income in the last 2 months, should I just document my tax or document my income now for taxes for next year? So recording this in January 2022. So let's say she started in November. How much would she have to, is there a certain threshold that if she didn't make a certain amount, she wouldn't necessarily have to claim that?
Right. So that threshold is about $400. So it's pretty low. So yeah, if you've seen just a few clients, you would probably be over that threshold. The way that it works is that you pay taxes in the period that the income occurred. So if income occurred from January to December of a particular year, then you have that next tax season to file the return to claim all of that. Something that might be helpful to note, they didn't necessarily ask, but when you're a brand new business, there's usually a lot of costs associated in the beginning. If you're forming a business, but haven't actually opened your doors to clients, you're actually not allowed to deduct those costs yet. There are startup costs. You can start to deduct them once you open your doors and you're ready to serve people. So anyway, it's just something to be aware of as people I know, start buying stuff, but then they're like, maybe they didn't open up their doors before January 1st. Though that is a situation where even though the expense was paid last year, you would carry it forward to the next year when you opened your doors.
Okay, awesome. So for example, if I put a deposit down on a space in December, but I didn't start taking clients and making income until January, then I would write the deposit on the space in my 2022 tax year rather than I learned something new today, guys. Yay. Okay, great. So I know we could talk accounting and geek out on this all day, but I do want to make sure that they come to you for that advice since you are the CPA. Where can people find you online? What is your business? Who do you serve? How do you help people? Give me the lowdown.
Yeah, I would love to. So best place to get, free content and free information is Instagram. My handle is @smallbusinesscpa. You can also check out our website, which is cartercookcpas.com. We help clients in 2 ways. So for a brand new beauty business who's like just starting out and maybe it's not within the budget to hire a full service accounting, we have a course called Beauty Bookkeeping, which is all about how to set up QuickBooks, how to enter your transactions, how to read your reports so you understand what they mean. And then most importantly, how you can pay yourself consistently and save for taxes so you're not surprised by a tax bill. So that's great for someone who's like brand new starting out and just kind of needs the basics to help get them through. And then we also have a full service accounting option where we just do everything for our clients: bookkeeping, sales tax, income tax returns for the business, for your personal. And then we also do quarterly CFO calls with our clients so that we can keep them in the loop of what's going on and they have opportunity to ask questions throughout the year.
Beautiful. I love that. Oh my gosh, that's awesome. I'm so glad something like that exists. And it is specific to almost like the beauty industry, right? Because you're a former hairstylist.
Yeah, we only accept the clients that are in the beauty industry. The only exception we make is if your spouse is self-employed, then we'll consider taking that too. But otherwise, it's just beauty industry.
Riches are in the niches, people. There's plenty of opportunity, plenty of money to be made when you specialize in something. Well, Michelle, thank you so much for coming on. You guys check out at Small Business CPA on Instagram. Michelle is amazing. Her content is awesome. That's actually what caught my attention to invite her on the podcast. So definitely a good resource to have. Thanks, Michelle. We'll talk to you guys next time. Have a good one.